Hello everyone, Coach Jay here. In this episode, we're going to talk about earnings, particularly the process you want to go through when preparing to analyze, strategize, and monetize on those events. If you've already watched my video on investor conferences and how to form a plan, the first steps are similar. The key difference between formulating a plan in response to earnings reports versus investor conferences is due to the timing of the release of information of the earnings report and the start time of the investor conferences. Investor conferences occur during market hours, while earning reports generally happen before or after open market hours. Because we teach low-risk strategies, it's important to keep in mind that you do not have the ability to do trail stop losses before or after open market hours. There's two ways that you can analyze, strategize, and monetize on earnings. The first way is to follow what is known as buy on the hype and sell on the news, which means anticipation of its earnings will commonly drive up a stock price. If you watch any given stock, it's highly probable that the stock will rise leading up to the earnings announcement. This rise will come in three forms: the week prior, a few days prior, or an hour prior. Each stock is different, so looking at the rise in one of those periods would allow for momentum and direction to be on your side, while specifically looking for the crossover of the price of the EMA and SMA, with emphasis on crossover of the SMA. Again, with any position, long or short, positions are commonly made using our at-home wealth management trees method, in which we identify our entry, exit, and stop loss. So when a company reports earnings, here's where the price is extremely volatile. There are three sections in an earnings report that drive the stock price way up or way down. First, it's gross revenue, or top number for the quarter, versus its estimated. Second number is its net income for the quarter versus its estimated. And the third, and most importantly, is its guidance for the next quarter and the remainder of the year. It is completely speculative and flat-out gambling, purchasing a stock prior to its earnings and hoping or speculating it will move in your intended direction. We do not teach gambling or speculative education here, and always aim to educate on avoiding high-risk, high-reward plans. We teach how to analyze, strategize, and monetize a plan to react to what the chart is telling us the stock price is doing, not what we think it's going to do. The rule of thumb is in this area is it doesn't matter if the stock is cheap or expensive. A plan is always based on what the chart is telling you. Back on that point, you need the perfect trifecta of beating revenue, beating net income, and raising guidance for the stock price to jump up. The company reporting may achieve the first two, beat revenue and beat net income, but if they guide lower or flat, the stock price most likely will dramatically fall, as its stock price is based on the money it will make in the future, not the money it just made. Please keep in mind the stock price must have room to jump up. If the stock price is already overbought or over 70 on the RSI, then the stock price based on the earnings may be factored in already, and the stock price may fall when they report. After reports after hours, it is still very high risk, as the price will bounce around based on a continued news coming out. The second method is to use the ASM model to formulate a plan based on the next day of the opening bell and based on our blast-off approach that we discussed in another video. Well, that concludes this episode. We hope this episode provided you an educational guide to better prepare you to begin your analysis to confirm direction and strategize your trade of a buy or sell. Thanks for joining us, and as always, let's try every day to do something great. Take care, everyone.